everyone. My name is Clay Carrington. I'm the Executive Director for the Canadian Blockchain Consortium, and I'm really excited for our next webinar, which is going to be the impact of securities and AML law on cryptocurrency exchanges. So basically today we're going to be talking very fascinating topic. Very heavy regulated financial services sector has some pretty clear laws that govern the trading of securities and other transactions. But the surge in popularity of crypto has introduced these new gray areas around the legal status of exchanges and digital currencies. So in particular, the proceeds of crime, so money laundering and terrorist financing act, and the high compliance standards of money service business classification. So both have some pretty serious implications for the way that exchanges operate. So without regulatory clarity, this growing sector of digital finance may face some serious challenges. So we're really excited that you're joining us today with our expert legal committee for this really deep discussion of how these issues and ways that cryptocurrency exchanges can keep compliant with FINTRAC. So a little bit about our CBC. So we're a not-for-profit organization. We're started in Alberta by this amazing woman named Suzanne West. And we've been going strong since about 2017 now. So we really promote like solid education, advocacy, projects, marketing, business development in the Canadian blockchain and cryptocurrency space. So if you'd like to learn more about us, we'd love you to check out our website on canadablockchain.ca. Of course, as a not-for-profit, we're very grateful to all the members that we have that have been supporting our consortium, many of them here since day one. So big thank you and shout out to them. Big thank you to today's sponsor, BLG. So as Canada's law firm, BLG provides high value advice and advocacy to address their clients' business challenges and problems. They go way beyond legal to anticipate, consult, and advise in a rapid changing digital world. So thank you to BLG, who's a gold member of our consortium. We really always love it when people want to engage with us. We will have a live poll during our event. If you have any questions, please type them in the Q&A. I know everyone likes to get them into the chat, but if you can put them into the Q&A, that way our panelists will be able to answer the questions pretty quickly that way. If you like anything that you hear today, you can take a screenshot, shout out. We're on Twitter, LinkedIn, Facebook, and if you hashtag us with Canada Blockchain, we will of course like and share. We're really excited. So we started a magazine this year. Basically our magazine, we're out researching every month, tons of information, and we condense it all into about a good 45-minute read. So you can learn everything that's happening in the space. It's a free magazine. You can go to our website and download our latest issue. And of course, for today, I'm very excited for the incredible panelists that we have with us today. So Anna Bador, she co-leads McCarthy LLP's FinTech group. She's a partner in their financial services group and a certified anti-money laundering specialist. She advises financial service entities, including financial institutions and FinTech entities, on regulatory compliance matters. So thank you for joining us today, Anna. And then we have John Dahl. He is a partner at BLG, Securities and Capital Markets Group in Calgary, and the Calgary Regional Leader for BLG's Investment Management Group. So John is also the Alberta representative for BLG's Digital Asset Group and is currently working with several cryptocurrency platforms as well as investment fund managers that are creating cryptocurrency investment funds. So thank you for joining us today, John. And last but not least, we have Hannah. She is a compliance risk strategist that has been working for a wide range of financial institutions, from big banks to early stage startups. Hannah has successfully led global regulatory change projects on open banking, AML, and more than the big five on regulatory that impacts operations in APEC, UK, EU, and the US. So thank you so much for joining us today, Hannah. All right, so we're going to kick it off into our first question. And so this is open one to the group. So with the dramatic rise in both the price and profile of Bitcoin over the last year, we've all seen this crazy price increase. At the consortium, we've just had this really big surge of interest from people, as well as companies are all seeking advice on how they can participate in this new digital economy. So as legal professionals, have you started to experience the same trend in your companies?
John, do you want to go first? And
Sure, yeah.
Oh, sorry. You go first? Or
Sorry, I misunderstood. Yeah, I can jump in. Yeah, I mean, I've been working on cryptocurrency officially at least since 2017. 2017, I was on the first Bitcoin fund in the country. And since then, it's been sort of up and down, but within the last sort of 18 months, we've been extremely busy. We've got professionals in each of our offices that are working on various deals. We have a dedicated digital assets group that encompasses a lot of different practice areas. We are working on multiple cryptocurrency platform registrations. We are working for some cryptocurrency exchanges. We're working for a lot of investment fund managers that are creating new Bitcoin exchange traded funds and Ethereum exchange traded funds. So we've seen a real rapid increase in the space. And that's coupled with a rise in the regulatory regime. So we're seeing much more regulatory scrutiny from all different regulators. And a lot of these cryptocurrency entities are going to need legal advice because the regulation is increasing rapidly. But yeah, we've been extremely busy in the space.
That's fantastic.
Maybe to add a bit more perspective on that, I would echo what John says. I think it is a particularly busy time for legal professionals that are advising in this area. I'd say maybe not as crazy as in the first kind of ICO run-up, which was frankly probably a little too crazy. But definitely, you know, there's a lot going on, a lot of reach outs. I think what's particular right now is probably more interest from institutional investors than before, as well as big kind of mainstream players. So everything from the banks to pension funds and large, you know, financial investors as well. And as well, I'm seeing a lot of interest in Canada from foreign players who are looking to expand. And so that's been, you know, great to see. I think part of it is that we are getting more regulatory clarity in Canada and are seen as an attractive market. So certainly an area that we're seeing a lot of growth in. And there's always, you know, new products in this space. And I think the rise of DeFi in particular has been causing a number of reach outs because these are particularly complex products from a regulatory perspective. Hannah, I'm not sure if you have a perspective being
no, definitely not a legal professional, so we'll defer to Anna and Jonathan. You know, and maybe just to give a little bit more background on myself. So I'm Director of Regulatory R&D at Wealthsimple, helped launch Wealthsimple Crypto, which is registered as a restricted dealer right now in Canada, and we will eventually transition our platform to an IROC registered brokerage. And so it's been a very interesting experience. And so, you know, we're working really closely with regulators in figuring out a lot of the moving pieces of what it actually means to be, you know, an IROC registered platform. And there's a lot of open questions right now, and things are moving quickly, but there's a lot of uncertainty as well. So I'm actually very curious as well on, you know, pieces around where does different DeFi projects fit into this regulatory landscape, where while we're still trying to figure out crypto asset regulation in Canada and who exactly is responsible for overseeing that and different components of it.
Yeah, for sure. Thank you guys. So with crypto exchanges, they've had kind of like long sought like legal clarity around their business models. So what are some of the primary laws and rulings that have begun kind of integrating exchanges into our regulatory financial system or regulated financial system?
So I can maybe speak to that from the securities law side. The way to think of securities legislation is investor protection legislation. So if there are lots of investors investing their money in a product, generally the securities commissions are going to find a way to regulate the space. There's some interesting technical legal arguments right now as to whether or not tokens are securities. some tokens are securities, some tokens aren't. However, when you're talking about a platform or you're talking about an exchange, the fact that the investor can come to the platform and buy the token and not take delivery would mean that they don't have the token, they have a right to the token, and that right to the token is seen by the Securities Commissions as either a security or a derivative, which means they have jurisdiction, and which also means generally these platforms, these exchanges, they're going to need registration, or they're going to need an exemptive relief order, Wealthsimple being the leading example of what an exemptive relief order would look like. But so general rule, the other thing that happened is the regulators saw a lot of these ITOs, ICOs, and when they took a look at those, they felt that they should invoke their investor protection power because there was very significant capital raising going on from investors. And anytime you're raising capital, there's a good chance you need to talk to a securities lawyer and see if you need to comply with the securities regime. And certainly what's going on right now is the regulators are very much writing the rules. And so, you know, by definition, there's going to be a lot more regulation coming from the securities regulators regarding the space.
So maybe I'll add to that, because I'll give the anti-money laundering perspective, which in very much is tied to some extent to the securities analysis. And I think hopefully by now there's a fair bit of knowledge in the market that FINTRAC, as the AML regulator, they have oversight over the AML regulation, including entities that are caught, which would include money services businesses, which include entities dealing in virtual currency. And typically most exchanges would fall within that category, and therefore would have had to register with FINTRAC and have an AML compliance program. Where it ties into securities analysis is that securities dealers are also a type of entity that's subject to the AML legislation. And the requirements, although similar and overlapping, do differ. There are certain requirements, for example, that would apply only to securities dealers, but not to MSBs. So I think it's interesting. We almost have had a bit of a stopgap in that there's clarity that, if you're an exchange, you should register as an MSB. But it may be that as you see clarity on the securities side, you take on additional AML obligations, which in some ways may make your MSB registration almost moot. So it's interesting because I think people tend to think of the two topics as separate, but they're really actually quite tied. And it may be that over time we migrate more to a securities type model, which may mean that some of the MSB requirements that we've looked at to date don't really, aren't triggered as much on a standalone basis. It really depends on the business model and the specifics, and it may be that entities have both, but it may also be that some entities that right now are MSBs become securities dealers and may not actually need that MSB registration anymore.
I can actually add to that just from our experience. Completely agree with you, Anna. I think the challenge right now with FINTRAC particularly is I think they're still trying to figure it out. So I've actually, myself have had exchanges with FINTRAC where we've, said this is going to be a moot point, where it's like, it doesn't really make sense for us to be registered both as a securities dealer as well as a virtual currency MSB. Right now we have to maintain both. And so I think they're still trying to figure out like what indicators, what aspects are going to apply to a securities regulator that's engaging in crypto trading versus just a virtual currency MSB. And I think it's going to be interesting. They definitely haven't figured it out yet, but I think eventually there's going to be a clearer path. I think what FINTRAC has done really well is they've created that stopgap where they were pretty clear where, under what circumstances you have to register. And by this date, you have to register otherwise. I think the challenge on the securities piece is like that's still very much being figured out, like who falls into the purview and how that's going to be enforced. I think we're still waiting on that.
Mm-hmm.
Yeah,
I agree. Oh, sorry, go ahead.
Go ahead, Anna.
I was going to say, I agree, it's evolving. I think, when you look at existing business models that engage in MSB activity, so if you look at a bank, for example, clearly they're engaging in funds transfer, but they don't have a separate MSB registration. So, it would be a bit absurd to have a situation where the crypto industry may be treated differently in this area. I think the evolving nature has to do with the fact that there is still a fair bit of learning and a fair bit of uncertainty on the security side as entities go through that process that I think Wealthsimple has had the pleasure of going through, and others are working through as well.
So with that, I'm really curious. So Hannah, Wealthsimple is definitely like a leader in terms of like being able to move through this process and get approved and regulated. So would you tell us a little bit about what that experience was like working with the Securities Commission to become regulated or registered?
It's still very much ongoing in terms of the work, so I can't actually speak to it too much in detail. But it is, kind of like how I mentioned earlier, we're all trying to figure it out at the same time. Like there are definitely different components of the rules, whether it's as a brokerage or as a restricted dealer, aspects of the regulations right now that it's still not clear how that applies in the context of offering like crypto trading. So I think we'll get more clarity within the coming months, but I think it's definitely a very much an ongoing process right now.
Yeah, and like one of the challenges we've been seeing is when you think of a token, it can be analogous to several different things, and depending on which analogy you pick, you come out with a different legal understanding. So in some cases, a token is clearly a security because it's attached to some underlying interest. So we're working on several securities token offerings where ultimately the token is backed up by assets. So it's clearly a security. In other cases, you have tokens that are mined. So the analogy for a token that is mined is it's like a commodity. So, gold is not considered a security, but commodities trading platforms are still often regulated by the securities regulators, even though they don't actually trade securities. And then yet another analogy is a currency. So we're working with some payment providers, and they're really not offering investors sort of speculative trading. Rather, they're there so that you can buy your Bitcoin or other token and use that as a means of payment. And you get into like a different analogy and a set of analysis when you think of it that way. So when you kind of look at all that from the regulator's perspective, we are very much in constant discussion with them about what they're willing to accept, how far they're willing to stray from the precedent. Again, Wealthsimple being the first precedent for a platform registration. So the regulators right now are very much, we'll give you something close to Wealthsimple, but if you want to stray too far outside that, we really have to talk about it. We really have to discuss it. It's a very interesting space because the playing field beneath us is constantly shifting. And, almost every time I talk to the regulators, they've got a new idea that they want to explore with you. So it's a very, there's basically a deep conversation all the industry is having right now with the regulators. And that's why there's a lot of uncertainty. And a lot of people in the space have really different business models. So you got to really analyze your client's business model and then come up with how it fits, as close as it can to the existing regime, and then work with the regulator to try to find a way to get there that serves the client's needs, but it also gets the regulators what they need. So it's very interesting space and certainly changing constantly.
I can only imagine. You guys have a big job on your hands from the legal perspective, having to like fully understand their business and their model, and then working with the with regulators to help them also understand, because it's a learning curve for a lot of people. I know, especially for me, I'm learning so much from all these webinars. So my next question would be, like, massive volumes and a broad global market pose challenges for exchanges, especially in managing their AML and KYC requirements. So what are some of the key ways that exchanges could develop a strong and more effective compliance regime?
Anna, do you want me to take that first and you can add to it? You're the compliance star, so I'm sure you'll have great perspective here. So maybe I'll start it. I think it may sound trite, but I think culture of compliance is really the key aspect here. And so you really want to show how important compliance is to the entire organization. Is it properly funded? Is there proper reporting lines? Is there ability to, if there's a compliance issue, is there ability of the compliance officer to have the ear of the right people and overcome those? Is there a budget to hire the right number of people and use the right kinds of tools? They're great tools in this area in particular, with cipher trace and chain analysis and so on. There's also the one point I would also add to this is really you can't automate or outsource compliance, and I think there's always that temptation, particularly in the more kind of tech-friendly spaces, to think, we'll just throw all this in software and we're good to go. And I think that's certainly an important aspect, but there's a big human aspect to compliance as well. And when you're dealing with regulators, they want to sit across the table from someone who truly understands everything and can give kind of the big picture and speak in a way that shows that they understand the nitty-gritty. You can't just say, well, we got software that deals with this. You have to be able to say, these are the flags and this is why we pick them. So it's at the end of the day, a big human undertaking that requires some investment in terms of, both financially, but also kind of buy-in through the organization. I'll turn it to Hannah to add to that.
Yeah, no, I think those are really excellent points. I think part of it really depends on the model, that your business model. So what I mean by that is, are you more on the payment side? Are you more on the security side? How are you delivering crypto? What does consumer behavior look like on your platform, and creating a compliance model that's commensurate to that, and being really clear with your respective regulator, not just what your model is, what are the tools you're using, the type of people you're going to be hiring, but also what does like compliance supervision look like, and enforcement. So like making decisions around what happens if, first of all, what's inappropriate behavior? Like, there are clear guidelines, but there's gray area as well. And so setting up a risk appetite and being really clear around that. And then what happens if somebody breaches that, and being able to demonstrate that and stand by it, and provide things like reporting, associated with it is really important, particularly in the securities, if you're going to fall into the category of having to be registered as a securities dealer.
Yeah, I would say, like, where we see a lot of compliance issues tends to be not so much the way the program is set up, but at the end of the day, who has authority and what happens when you're in difficult situations. So, for example, this goes back a number of years, but Ripple was fined, at the very early days by FinCEN, and it had to do with decisions to permit transactions from, and I can't remember the specifics, but I think it was either a very large customer or someone who was friends with the executives or the board, and that is the type of situations where we see people get into trouble. They have great policies and procedures, etc. But when you have a decision that's economically or culturally difficult to make, sometimes there's a default towards let's let's override compliance, and that's where trouble tends to happen.
Yeah, Ripple is definitely a good example of why it's important not to skirt your regulators. So like cryptocurrency exchanges, they're kind of like this part of this like brave new world. I've heard it referred to, I think probably back in 2017, everyone was talking about like the Wild West of of the finance market. Is how people constantly kind of talked about, like, oh, it's unregulated, it's crypto, it's totally fine. It was fascinating to me that people thought that, but so kind of like this brave new world that we're in. But as we're hearing today, like a lot of the policy and regulations are becoming more clear, and they're starting to, you know, become more firmly mainstream. So do you have any advice that you would give to operators, exchange operators, as the industry starts to move forward?
If they don't have legal counsel, their starting point is to get legal counsel immediately. Essentially, the way the rules are written right now, based on the staff notices, if you're operating a platform, very likely you need registration or exemptive relief. And what's going on is platforms that are operating that got legal advice, they are all in discussions with the securities regulators right now. And the fact that they're in the discussions with the securities regulators right now largely will save them. It will give them a little bit of amnesty. The ones that are not cooperating with the regulators, the ones that are not seeking exemptive relief or registration, at some point, they're all going to get shut down. And it's just a matter of time. So what happened when they first came out with the staff notice, I actually called the securities commissions and said, I've got your staff notice. It looks like pretty much every platform in Canada is currently offside. Are you guys going to take enforcement action? The general response was, as long as the platforms are working with us to get the right registration, we're not looking to go after them. But at some point, this grace period will end. At some point, everyone will need registration. So the best thing to do right now is to get legal advice as to what your business model is, how that would fit within the regime. And then depending on that answer, you might want to get into discussions with the regulators right away, just so they know you're trying to be compliant. Because at some point when the regime is fully sort of crystallized, anyone that's not registered will be operating illegally and will have very serious consequences coming to them.
I would agree with that. I would also say, you know, when there are consultations, take advantage of those and provide feedback. It's not always successful in changing the course of things, but it does have influence. And the more you engage that way, the more you'll find that you're kind of within the circle of entities that are kind of advised of changes and part of dialogue with regulators. I would also add, you know, in terms of what John was mentioning, prior advice may become stale in this area. So it may be that, you know, a few years ago you were told what you're doing is fine, and there's constant evolution in how this space is seen by regulators, and what may have been kind of gray areas. And in particular, I think there were gray areas in the past with exchanges that just traded in Bitcoin and Ether, and there were views that prior to the, you know, the CoinSquare settlement and Wealthsimple's exemption, that perhaps those, and prior as well, frankly, to CSA guidance that came out last year. So there were some views back then that perhaps those weren't caught under securities laws. I don't think those were necessarily certain views, but I think there were some views in the market of that nature, which at this point are totally stale. And so you do have to keep in mind that you need to get kind of up to date and current advice in this area, and not rely on advice at a point in time.
A really good point. So I have a question. It's a curiosity for me. So I don't have a business that operates, you know, cryptocurrency or anything like that. I'm also not a lawyer, so forgive it if it's a little bit of an ignorant question. But as I watched, like we had that 2017 ICO craze where there was a ton of like ICOs and ITOs, and people were even talking about like initial mining offerings, like IMOs and this kind of stuff. And we had these exchanges pop up that were allowing for people to kind of get on board, exchange their fiat currency for any of these other tokens that came out. And I see that the Securities Commission is working strongly, or trying to work strongly with the exchanges specifically. And I am seeing that they're going after some of the larger ICOs that came out, like, you know, Ripple, et cetera. But where my curiosity is, and my question is, you have a lot of illegal kind of like securities offerings with all these different ICO tokens that came out. And then you have exchanges trying to be regulated. But is there, I'm curious on how these exchanges are going to be allowed to continue operating and carrying these kind of like illegal securities tokens on their platforms when they're regulated, if the token itself is unregulated. Does that make sense? I'm just kind of curious. And yeah. I'm probably a broad, confusing question and lots of, you know, discussions around it, but that's probably been one of my biggest, like, how's that going to work?
It's complex is the answer, but there's a few different pieces that went on there. When the commission saw the ICO craze, the ITO craze, they very much got worried about mom and pop investors investing in products that were unsuitable for them. And because there was a capital raising component, they right away sought to take jurisdiction. You can contrast that with Bitcoin, because Bitcoin didn't do a token offering, it's mined. So and the analogy, it's a lot more like gold, and it's got some more flexibility. It's not, in certain cases, it's regulated as a security, but in other cases, it's not. So when you look at a platform that would just have Bitcoin on it, the Bitcoin itself is not considered a security, but your right to get the Bitcoin from the platform is a security, and that triggers registration of the platform. What's happening with some of my clients is they're just pulling off any tokens that might be considered a securities token so that they can say we're only trading essentially commodity tokens. If the token turns out to be a securities token, then there's another sort of level of investor protection rules that are going to trigger. So general rule in Canada is you can't issue a security, distribute a security without a prospectus or a prospectus exemption. So if you were to have a trading platform that was trading securities tokens, generally those securities tokens are going to need to be prospectus qualified securities, and they'll have had to comply with the whole securities law regime. So what's going on right now is the platforms are very much analyzing what tokens do they have on the platform and how are they traded. Ripple is an example. A lot of people have Ripple on their platforms. The SEC is looking at Ripple. The Canadian regulators are taking a wait and see approach. My gut is if the SEC concludes it is a security under US laws, then it's very likely the Canadian regulators will conclude it's a security under Canadian securities laws. And then that triggers this other sort of compliance regime. So platforms will need, you know, some of them might have to just take Ripple off their platform because they're not going to be able to trade securities on their platforms. And then when you go back to the ITO, ICO craze, why a bunch of them got in trouble is they didn't comply with the securities law rules about raising money from investors. So as I said earlier, you need a prospectus or a prospectus exemption. So the proper way to do an ICO in Canada is generally going to be to do a prospectus or a private placement under an exemption, like the offering memorandum exemption or accredited investor exemption. But it's a great question because it is very confusing, because depending on what that token actually is, it invokes a whole other set of laws. You know, whether it's analogous to a commodity or whether it's analogous to a security has a big impact on how it's treated.
Yeah, no, I would just echo that, and I would say that part of why there was so much reach out to legal firms in connection with ICOs was because they wanted to get opinions from law firms to give comfort to exchanges who didn't want the risk that they were illegally trading in securities. And so there is, both types of parties are affected here by these decisions, both the exchanges and the issuers themselves. As a result of evolving law, and maybe that tokens that are listed at one time may not be listed in the future as they're determined to be securities.
Interesting. And just so for anyone who's listening who may not know, what would be the difference between a commodity and a security? So I heard you earlier say that like gold was considered a commodity, but depending on the platform that might be trading or exchanging it, they could be considered like securities brokers. So I'm just kind of curious on how you would define a commodity versus a security.
There's some technical definitions in the case law which I can move to. The easiest way to understand it is if you're raising capital from investors, the securities regulators are going to find a way to regulate you. So if you want to do an ITO or an ICO and you want to raise a bunch of money, you want to create a token, you'll issue that token to investors. The investors will give you capital. You will use that capital to build up the business. That has all the hallmarks of the sort of historical analysis of what a security is. So it's an investment in something where you're not in control and you're reliant on the efforts of others to make you a profit. When you look at something like Bitcoin, the reason it wasn't falling into that traditional definition is Bitcoin, you can just go on, your computer, you can start mining Bitcoin. You're not giving capital to somebody. You're not expecting a profit from an underlying business. So you don't have sort of the hallmarks of the traditional securities analysis. And that's how Bitcoin gets out of it. The interesting thing about all of this is some of these tokens are so unique that there often is a gray area as to whether it's on a security or a token or a commodity token versus a securities token. Often when we looked at utility tokens, we were trying to argue with the regulators that a utility token was not a security. In some instances, we were successful. In others, we were not. What it really boiled down to, again, was this idea of capital raising. So if you've got a company and it's going to raise a bunch of money from investors, and the investors are, potentially have some upside based on the efforts of that company to build up the business, that's going to look like a security and it's going to invoke all the securities laws. If you've got something that's just straight mined and there's no ICO, et cetera, then it's much more likely that would be considered like analogous to a commodity. But it's a great question because there's a line and some things are clearly on either side of the line, but there's a big sort of gray area down the middle. And, the regulators are still very much in a learning stage, in an information gathering stage. So, chances are some of these things that are considered commodity tokens right now will in the future be considered securities tokens because the commissions will want to regulate them. I mean, Ripple's the live example right now. I think they'll ultimately conclude it's a securities token just based on what they've been doing and what the politics are around the space. But it's interesting because there's a healthy debate on that one. And, as I said, the Canadian regulators very much are waiting to see what the SEC does and likely will take a similar line. And the reason they would take a similar line is our regulations are similar to the US's. So if it falls under US regulation as a security, likely Canadian analysis would be similar.
Interesting, because I know there's a talk in some of the crypto community regarding like Bitcoin versus like Ethereum and how both of them are currently not considered a security, but many believe that, Ethereum should be considered a security. And so it's kind of, I'm not in the space in that way. Like I'm not a lawyer, so I don't really understand like why Ethereum wouldn't have been deemed a security considering, how they kind of operate as well. But that might be like for a whole other topic and discussion.
Well, I think you're kind of treading on difficult ground from a legal perspective, because I think there's some simplification there that to like a non-lawyer makes sense, because if you're not a lawyer, you tend to think of Bitcoin and Ethereum like as you know, that's the concept, and we have to determine whether that's a security. But from a legal perspective, and John, feel free to pipe in because I'm not the securities person, but the right to acquire is in and of itself a different thing from the underlying, you know, currency. And so part of what has caused challenges in this space was the guidance that came out last year from the CSA on the need for immediate delivery, which essentially stated that unless there's immediate delivery of the cryptocurrency, it's essentially a derivative. And so immediate delivery was also defined very narrowly to like truly immediate delivery, not you have delivery to a wallet if you choose, it's delivery to an outside wallet without any action of any party. And because most exchanges operate in some custodial manner, that's a difficult structure to achieve, practically speaking. And I think, John, that's probably what you were referring to, you know, when you mentioned that guidance came out that essentially resulted in many current models being offside the proposed guidance. And, you know, I'm not a securities lawyer, and I find that concept strange that, you know, you're distinguishing between Bitcoin and the right to acquire Bitcoin. These are different things. And if it's difficult for me as a non-securities lawyer, I can only imagine that it's difficult for, you know, people who aren't lawyers at all. But there are very subtle little distinctions, and that's why like the facts matter so much in how an exchange, for example, is structured.
Yeah, that's a great point, because that's essentially the analysis as to why a commodities trading platform would also need registration. It might allow people to trade gold or something else, but you know, you're not actually taking physical delivery all the time. You've got a right to get it, and that right is either a security or a derivative. The custodian point is an excellent point. So when you look at, I think Quadriga was the one example, and that basically is completely spooked all of the regulators. So a huge issue right now for any platform is most platforms want to self-custody. And the issue with that from the regulatory perspective is they see that as risk to the customer. So the ideal for a securities regulator is the custody of the assets are held by an independent party, independent of the platform, or the platform itself complies with all the custody requirements that a custodian would comply with. So, you know, they would have functional independence, firewalls, protocols, etc., to really prevent a Quadriga from happening. So you can see what sort of happens is there will be a bad incident where investors lose a lot of money, and that will cause the securities regulators to say, okay, we can't have one of those again. What investor protection should we put in there? So we're actually expecting more guidance to come out from the regulators soon. It could be next month, but custody will be one of the key things we're expecting them to clarify. And they are very much looking at, like, if the platform was to go get registered with IROC and was able to meet all the IROC custodian requirements, then the platform would be able to self-custody potentially. Other platforms that are trying to go the sort of simple path, so far the experience has been they've had to use third-party custodians. The space is changing quickly, and I can say the custody issue is like one of the biggest issues right now that we are in discussions with the regulators about. But you can see why they want it. They want it as an investor protection tool. And that's sort of what's driving a lot of these analysis and a lot of the ways they're looking at things.
I think just maybe to quickly add on Jonathan's point, yeah, that's exactly it. There's going to likely be eventually a list of approved securities or custody locations that IROC is eventually going to have and be able to share with. And there's a reason why, most platforms, whether it's through the ETF offerings or Wealthsimple, for example, have chosen a third-party custodian like Gemini Trust that's located in New York. And there are one or two others that fit the bill that are quite similar as well. But it's a pretty extensive list that you have to qualify for to be like an approved location for custodying assets.
Yeah, I was gonna say, and I'm simplifying here, but I think Quadriga has made securities regulators think about, the not your keys, not your coin issue, and really fixate on that, which has meant that it can be a bit difficult to conduct that kind of business of having an exchange where you do keep custody in terms of what the compliance requirements really mean.
Fair. All right, so we're going to tip into our Q&A portion. So for all of you listening, if you have any questions for our incredible panelists, please type them in the Q&A spot. So our first one is, what are the biggest advantages for crypto exchanges to become securities dealers? Many US exchanges allow for staking and limited asset management type activities without SEC registration. I wonder why staking, that one's curious to me.
Well, so I guess I can chat about that briefly. I mean, at some point, my view is most platforms in Canada will need registration. There's, when we started working on these deals about 3 years ago and started the discussions, there was a view that we might be able to have utility tokens and we might be able to have some platforms that perhaps were not touching on securities laws, but it seems like that ship has generally sailed. So the advantage to being registered is going to be, well, number one, you're eventually not going to be able to operate without it. And number two, it's going to give you a lot of legitimacy. So for some of our clients, they've got really big ambitions and they've got, very big banks, very big institutions that are interested in partnering with them. These institutional investors are very much looking at buying large quantities. There's Bitcoin ETFs being launched. Those types of institutional players cannot deal with an unregulated entity. One of the first questions they will ask is, are you registered or are you in process? Because they very much have a lot of internal controls and policies and won't be able to deal with unregistered entities. So I think registration in Canada, generally, it's going to be inevitable. The question really is, what is your business model and what registration do you need? Like, are you more of a money service business, more of a payment business? And then maybe you're looking at more of a money service business registration. Or are you more like a platform or an exchange, in which case you're looking at a securities registration? But ultimately, I see at some point, everybody in Canada will need registration and people who are not registered will be prosecuted. So that's coming at some point in my view.
Oh, absolutely. Anna, anything to add?
No, I think that warning is stark and correct.
I definitely agree with that. Okay, so next one. Banks and securities dealers do not need to register as MSBs, and the regulations under MSB provisions do not apply. Would that mean securities dealers that were MSBs would no longer have ETF, travel rule, and reporting obligations?
I'll take that one. The travel rule obligations really come out of the FATF guidance, which broadly applies to what's referred to in there as VASP, virtual asset service providers. And so regardless of how things get structured under our legislation, there is a a requirement for a FATF member country to ensure that virtual currency exchanges are complying with the travel rule. So I think, you know, when I'm talking about the fact that, you know, securities dealers are in and of themselves subject to the legislation, I think we're probably looking at additional obligations, not fewer, which is probably not the message that anyone wants to hear, but I don't think it's a gotcha on the travel rule. Hannah, I don't know if you have a perspective on that.
No, that's exactly it. It's unfortunately adding complexity and layering on more requirements is the short answer.
As this might be a silly question. Again, I'm sorry, but just for clarification. How exactly does a bank not have to register as a money service business? Like, isn't that exactly what they are? Money service business?
Because there's a whole category. So basically the legislation applies to categories of different entities. And most of the categories are actually types of entities, not types of activity. The MSB category is a bit different because type of activity. So all this to say that banks are already caught and are subject to much more onerous requirements than MSBs are, which means that anything that would get added on from being an MSB is actually already covered. So when you're engaging in MSB activity as a bank, it does not impact your, you know, whether or not you're subject to the act, because you're subject to the act by very virtue of being a bank. And it's the same with a securities dealer. You're subject to the act by very virtue of being a securities dealer, no matter what you do. Whereas a money service business is not, it's not a type of entity, it's a type of activity. Like you don't form a money services business under, you know, as a certain, under a certain piece of law, and you're not seen by a regulator other than FINTRAC as a type of entity, unlike a bank or a credit union, insurance company, those types of entities which are subject to a whole slew of other requirements. So MSBs are kind of a bit of an interesting type of entity caught under the act, because they're really focused on the type of activity as opposed to the nature of the entity. Not sure if that's too legalistic, but yeah, the short answer is that banks need to do a whole ton more than MSBs. So making them MSBs would really not add anything to it.
So I know a lot of exchanges are like registered as money service brokers, and sorry, it's my own question now. So like I met an exchange recently that has like 3 MSB licenses, but that doesn't get them what they need from the Securities Commission to operate. So is it like an initial step, like you need to get this and then continue working with the Securities Commission to get like the next level?
Well, so they're 2 different regimes, and they don't always talk to each other very well. And that's kind of part of the point, that when the AML legislation was initially amended, you know, this was 2013, 2014, it was a long time ago, when, you know, Silk Road was really causing a lot of angst of AML concerns in the crypto space. And so they were seen as this urgency of, oh my God, we need to do something about this. And at the time, I think there was very little deep thinking about to what extent any of these cryptocurrencies were securities, because really at the time, this was pre-launch of Ethereum. You know, you really had Bitcoin, which was used for payments. You didn't have, you know, a whole bunch of tokens that were doing ICOs or anything like that. So basically the MSB licensing originated before all the securities concerns and focus really started. That's why, you know, it may be that over time it's more of a stopgap, because that was seen as priority number 1. And it also predated a lot of really interesting business models that were much more, you know, closer to being securities.
Yeah, I think it'd be fascinating. Like if they actually pegged Ethereum as a security, that must mean like every ERC20 token under it would have to register as a security, and that would be a whole kettle of fish. So maybe that's why they're like, it's not a security, because that'd be a lot to go through. Our next question here, are you referring to CSA staff notice 46-307? I know a new one came out quite recently, I read today, it's 51-363, so I'm not too familiar with the 46-307. Were we referring to that in our conversation?
John, do you know your CSA notice numbers offhand?
Yeah, I think that's the one. I thought the one in the 50s related to the disclosure for public companies, but I haven't read the new one on the 50s yet. But yeah, it's the staff notice really talking about the regulation of platforms.
Yeah.
Yeah, that's January, I think. Yeah. Yeah, the one that came out today, I only had a chance to scan it, but it really talks about, as you said, John, disclosure requirements for reporting entities that have some exposure to crypto assets, including miners and some of the funds, etc.
Awesome. So next one, what is Tether classified as?
I don't know if I want to say, because maybe there's a chance it's not a security, but it looks like one. So
it walks like a duck and talks like a duck. Maybe it's a duck.
Yeah, that's the problem. I mean, the main issue will be, again, like we can get super technical into the rules, but keep in mind the securities commissions can just write new rules if it doesn't work, or if it's not capturing the like right now what they want it to do. The government can amend the law, and the Securities Commission get to write regulations. So the way to really look at this stuff is to sort of step back and say, is there an investor protection concern? Is somebody raising capital? Is this token tied to something else? If you start getting into those factors, it's likely going to be considered a security. Really, if it, stable coins as well, like, so some of these things start to look a lot like a security. There is a gray area, but my view generally is at some point, if there's an investor protection concern, the regulators will find a way to regulate it. So that's, often the easy answer is, are you doing anything that's going to invoke a regulator's concern? You've got to talk to a lawyer and make sure you're compliant, because at some point they might take issue with that and deem it to be a security, in which case you're going to need to fully comply with the regime.
All right, so currently, do you think that retaining a qualified third-party custodian to custody client assets would allow an entity that exchanges non-security tokens to avoid the need to register or even apply for exemptive relief, given staff notice 21-327? I ask because it seems as though Wealthsimple, despite proposing to custody assets via a qualified custodian, still felt the need to apply for exemptive relief. That's a big question.
You would still need registration or exemptive relief, even if you have a custodian.
That's just one component of it.
There's it won't
a slew
absolve
of things. Exactly. There's a slew of things that you need to get exemptive relief, or you need to register.
All right. So how would a Canadian Gemini custody or Coinbase custody need to be registered? Okay, sorry. How would a Canadian Gemini custody or Coinbase custody need to be registered with for just Bitcoin, for example?
So I would say on that, Gemini is a trust company. They hold assets in trust for third parties, and there are trust company structures in Canada as well. So obviously everything's always the devil's in the details, but if you look at the structure that they've chosen, that's the one that they've gone with. So if you're trying to replicate that structure, it would be a trust company structure most likely.
Mm-hmm. Yeah, and I think MicroStrategy is using Gemini as well, and even 3IQ I think uses Gemini. So quite a few.
They are the sub-custodian on most of the issuances in Canada. There's a Canadian custodian who then sub-custodies to Gemini.
Well, I really hope they know how to keep that that Bitcoin safe, because to me they seem like a really awesome honeypot at this point. It's just like, ooh, everything's there. All right, so we'll go for one more question because I know we're running out of time here. So thank you guys for being so patient with us. Do Canadian securities regulators care very much about Canadian crypto companies that engage in activities that are restricted in Canada, but only with non-Canadian entities? I.e., imagine a company is domiciled in Canada, but with respect to the delivery of activities that require licensing registration in Canada, only service non-Canadian clients.
Generally, you're going to need registration if you're here. So one analogy is in securities laws, you often need to comply with all the laws in the home jurisdiction, as well as all the laws in the investor jurisdiction. So for example, if an Alberta company was distributing securities to an investor in Hong Kong, the Alberta company still needs to make sure it's fully complied with the Alberta regime, plus it will need to comply with the Hong Kong regime. So if you are operating a platform here that only serves offshore investors, you probably need to get legal advice, because normally if you've got that construct, your business is actually also structured offshore. But if your business is structured onshore, even though your clientele is offshore, you will still need to comply with all the onshore requirements, including tax, including securities. So it's a very great question, and it does sometimes surprise people. I've had people that wanted to set up a business in Canada only servicing offshore, and we actually did have to get them registered with the Alberta Securities Commission to do that. So excellent question.
Awesome. I'm sorry, I really want to ask this one last one because I know this is a huge issue in the community right now. It's around banking. So in your opinion, would being a securities dealer give you a better chance of actually securing and maintaining banking services? More so than being a crypto-related MSB in Canada, because it's extremely difficult to get banking or to keep a bank account open or even have a bank talk to you about this. So do you think that being registered will help with that?
Absolutely.
Hannah had a pretty strong reaction to the opposite right there.
I think yes, in theory, I agree with Jonathan's initial reaction, but I think it depends on when you're trying to do this, right? I think banks are very similarly on the same path as the regulators in the sense where they're learning and they're trying to understand each business model is different in its delivery and its exposure to the bank and their operations. So it depends. If you're trying to do this today, it's probably going to be just as difficult. Maybe a few months from now, it might get easier as there's a more clear understanding of where the rules are and how if you actually successfully obtain registration, what is the exposure that you pose to the bank, because they have their own sets of rules and their own monitoring that they have to do, and they're assessing everything on a case-by-case basis. But right now it's still challenging.
It's absolutely challenging still. Even as an analogy, we're working with several fund managers who are fully registered with the securities commissions, and they want to launch Bitcoin ETFs. Just getting the banks to act on the Bitcoin ETFs is challenging. The banks are interested, are doing it, but they are very process driven, and they have a lot of checks and balances to go through before they can approve these deals. So even with clients that are completely registered, getting banking is a challenge. But I think eventually where it will land is you will only be able to get banking if you're appropriately registered. So it's going to be, in most cases, for most businesses, you're really going to have to look at whether you need that registration or that exemptive relief, and you will need to get it eventually.
Absolutely.
Yeah, I mean, I would echo both Hannah and John. I think it's profoundly challenging to get banking services in this industry, and I certainly see that. When we get reached out from foreign entities, that's typically one of the first questions, like, how are we going to get a bank account for this? But I would say, the level of oversight over securities dealers is much more involved than that over MSBs. And as a result, seeing it from the perspective of a bank, you're looking at an entity that's jumped through a lot more hoops in order to become a securities dealer than just an MSB, which gives more comfort. I think there's always going to be some conservatism when crypto's involved, but at least when they feel that a regulator that has really broad oversight and where there's a number of different compliance requirements, as opposed to with FINTRAC, which is more of a registration regime where FINTRAC can examine you when they want, but that's different from a securities regime where you're much more closely watched by your regulator. So I think there should be more comfort from the point of view of a bank in banking an entity that's gone through that process. I think it's never going to be easy, and maybe, well, never a stark word. So hopefully eventually it will be easier, but in the short term, I don't think it will be necessarily easy. But you've shown you've done a lot more in order to become a securities dealer than just an MSB. Quadriga, for example, was an MSB, but obviously there were some issues there.
Yeah, that's definitely a big one. Well, thank you guys so much for joining us today. I really appreciate it. So John and Anna, thank you. They're part of our legal committee with CBC, and Hannah sits on our FinTech committee. So it's so great to get such incredible insights. And I know our legal committee is doing a part 2 of this very fascinating dialogue that's going to come out in April. And I think our FinTech committee is working on a second roundtable to kind of follow up on the one that we did last year. So if you guys are interested, please check us out. Again, canadablockchain.ca. You can sign up for our newsletter. You'll get information on all of the events that we have coming up. And I hope you all have a really great day. Thank you so much for joining us.
Thanks for having us.
Yeah, thank you very much.